So I finally sold my Exxon Mobil shares. They were in my TFSA. So here I sold them at 82.50. I had bought them at 75. And let's see how much time it took me. Alright, so Exxon Mobil I bought in February 2018 and sold it in May. So exactly 3 months. So in 3 months I made 82.5 divided by 75, about 10%. So yeah, 10% in 3 months. So that's with just one stock. Now I don't put everything in one stock, but you get the idea that it is possible to make good returns on the stock market. Anyone else could have put everything in that stock and would have made 10% in 3 months. And then you just repeat the process. And if you're consistent, if you're able to find these opportunities every time, well then if you're making 10% every 3 months, that's 40% a year. And a good thing I sold it, because as soon as I sold it, it dropped the next day and the following day, and now it's at 78. So it's almost back to the price that I bought it at. But that's good though. I'd rather take advantage of the fluctuations. Even though long term it's probably gonna go above 82.5. But if it reaches 75 again or even lower, I can buy back again and hopefully take advantage of another fluctuation, of another ride up. So yeah, I'll keep it in my watch list. If it drops below 75, I'll buy some more and sell it again above 80, depending how long it takes. Now, why do I choose 75? Just by looking at the chart, seeing how long it's been above a certain price. So if we look at 1 year, you could see that 75 is the low point in a year. And that most of the time, about 6 months of the year, it was trading above 75 all the way up to 82. And at the beginning of that year, it was trading between also 79, all the way up to 89. So 6 months of that year, it's trading above 75. And if we look at 2 years, trading above 80 most of the time. So 75 compared to past performance in the charts is relatively low. And since the direction of any stock is to go up, so it's just a matter of time before it reaches back the price that it was at or even higher, as long as you buy stocks from good companies, good name companies, or big name companies that you're confident are not going to disappear. Now, can anyone tell me why this stock dropped all the way to 78 after it was at 82.5? There really is no reason for the stock to drop like that, yet it still did. So that's why sometimes I feel like the stock market is a game. But why not take advantage of the game or play the game? And I'm happy to show you how I do it. And like I say in many of my videos, it doesn't mean it's the absolute right way, but this is what I do and it works for me. And you're welcome to copy it or take what you like from it and use it for yourself. But I have no problem sharing my strategy or my tips. So if we review my portfolio, I still have my Ford shares that I bought at 10.91. Right now it closed at 11.51, giving me a 5% profit, but I'm gonna hold on to it. I want to sell at about 12. I got my Procter and Gamble that I bought at 74, right now trading at 74, closed at 74.31. Maybe I'll buy some more if it drops below 70. I've got my Dividend 15 Split Corp. That's a mutual fund that gives really good dividends, although it's suspended right now. I bought a little bit too high. I bought it at 6.69. It dropped all the way to 5.12. I regret not buying some more of 5.12 because it went all the way back up to 6.2 about. Could have made profit there. Regardless, right now it closed at 5.96. I got my Ford options that I bought at 155. It closed at 2.17, giving me a 40% return. That's why I like options, because you can make better gains, but it's a bit riskier because you're limited by time. So if you make the wrong decision with stocks, you can wait as long as you have to. But with options, the stock needs to perform the way you expect it within a certain amount of time. So yeah, I'm gonna probably sell it at 2.4, so I'm waiting a bit on that one. Tesla that I bought at 250 went all the way up to 306. Right now it's at 278. If it drops below 250, I'll buy some more, because I only have one share in it, because at that time I only had that amount of money available. And I've got my Walmart shares that I bought at 86. Right now it's at 82. Definitely this is a good buy for whoever hasn't bought Walmart yet. Walmart isn't going anywhere. So this is just a small hiccup for investors to buy in. That's how I see it. I mean, if you look at the financials, if you look at net income, so 2015, 16 billion net income or profit, 16 billion on 485 billion revenue. And then 2016, 14 billion profit. So net income dropped. 2017, 13 billion. It's dropping. 2018, 9 billion, yet revenue increased. Revenue in 2018 was 500 billion, yet net income was 9 billion. So it seems like they're spending more They have more expenses. So cost of revenue, cost of goods sold, that's fair, but it looks like they're not controlling their selling and admin expenses very well. Because if their revenue increased, their profit should also increase, but it didn't. So they're not managing their expenses too well. But at 9 billion profit, you can't say it's a company that's going to disappear. Let's look at it quarterly. So net income is decreasing. Revenue is stable, but net income is decreasing. So their operations, they're not managing their expenses too well. But they're still making every quarter 2 billion profit. Let's look at the reports. So not a strong buy, but a buy. Recommendation, 12-month target price 109. So definitely a strong buy in my opinion. Walmart at this price or even lower. Since I bought at 86, I'm probably going to buy some more if it drops below 80 I mean. I have an order here at 78, so buy 5 shares at 78. But for those who haven't bought, I think buying at this price is good. I personally bought at 86 already. So that's my portfolio under Questrade. If we go to Investors Edge, so I've got my Enbridge that went all the way up to 43, dropped now again to 40. This is a stock that I bought an average price, I believe 45 or 48. I believe 48. Getting closer. It was trading at 38 and 37. So I'm happy that it's back in the 40s. And while I'm waiting, I'm collecting dividends about 6% per year. So it's really not a bad, it's not a bad buy, but it's a good buy for those who haven't bought in yet. Now, if I look at my TFSA, so I've got Synovus Energy that I bought at 15. It went all the way up to 14.50. I considered selling, but I didn't want to make a loss, so I was patient. Like if it reached 14.50, maybe it's going to reach 15, but instead it went back down. Right now it's at 13.42. So maybe I should have sold at 14.50 and just taken my loss. So I've got more Enbridge here. I think this one I bought at around 45 average price. So it was all the way up to 43, but now it dropped again to 40. So just gotta wait. Collecting dividends while I'm waiting. I got Hudson Bay that's killing me. Really disappointed. I think this is the worst trade I made because I bought at 13.50 and I think it's been over a year now and it's still trading below 10. General Electric that I bought at 17, it went all the way up to 15.40 about, but it dropped again to 14.63. So still waiting. Would not recommend to buy this right now. Kraft Heinz, bought at 75, terrible buy. I just bought it recently and collecting dividends on it, of course. It went all the way up to 59, I believe, and then dropped again to 55. Now it's at 57. So can't do anything but wait right now. And while waiting, I'm collecting dividends. And I got the New York Mortgage Trust here that I keep for dividends. I bought at an average price of 6, and I collect about 11 to 13% dividends per year. So it's not bad. This one I just keep for dividends. In case if it ever goes above 7, I'll probably sell. So my buy recommendations would be Exxon at around 75, Ford below 11, Enbridge at the current price or even lower, Walmart for sure right now at this price, Procter and Gamble at this price or even lower. Coca Cola I'd keep an eye on until it reaches 40. I'd buy it at 40 for sure. Right now I'd wait, although it's not a bad buy right now, but I think it can go lower. So I'm gonna see it reached 41, 45, but I think it can reach 40. So I'll wait for that. Although sometimes I've been wrong and I missed out on good opportunities because I wanted to buy it lower and then instead it just went up. Like Intel that I wanted to buy at 40, I think it reached 42 and now it's trading at 55. And Nike also had the same issue. I put an order at 50, it reached 50.5, and now it's at 72. So I definitely regret not buying this one. Although I would not have held it until 72, I would have probably sold it at 55. Would have made 10% and got out. But many opportunities I missed out on just because I wanted to buy it at even lower. I'm also strongly considering Westjet. It's at a 52-week low. 52-week low is 19.18. Right now it's at 20.37. So I'm strongly considering putting an order at 20. Although 1 year target estimate is 20.78. Let's look at the financials. I prefer to use Investors Edge to look at the financials. So what is it? WJA. Alright, so net income 390 million in 2014, 520 in 2015, 400 in 2016, and 400 in 2017. So it's not growing, but it's stable. It's making 400 million profit per year. Let's look at net income here. 284, 368, 294, 280. Yeah, it's not growing and it's making about 300 million profit per year. Revenue is slightly growing. So revenue is slightly growing, but net income or profits are stable, meaning that they're not managing their expenses too well. Let's look at the quarterly. So the last 4 quarters, revenue is stable in the last 4 quarters. Net income is, wow, okay, that's not consistent. So So September 2017, revenue is about 1 billion, and they made 138 million net income. So 138 divided by 1216. So they made about 11% of their revenue as profit, but in the last quarter they made 37 divided by, they only made 3%. So yeah, they're not managing their operations too well, or their expenses too well. 3% net income is not that well. 3% net income is not that great, especially when they were making more than that. So they're not consistent. Now, if we look at their expenses, it's hard to say what's the cause. It looks like everything is slightly higher. Yeah, so something's not running smoothly, but still doesn't look like they're not disappearing. If anything, they're probably just going to get bought out. So let's look at the reports. So this report says hold. Morningstar says fair value is 23 and that it's undervalued. Okay, that's good news. This report says hold also. This report says hold. This report also says fair value is 24. Fair value, so right now it's trading below its fair value. So CIBC's report says that the 12-month target price is 20. So not too sure if it's a good buy right now. Let's see, it pays dividends, I believe. I think about 3% dividends. Yeah, 2.75% dividends. So I'd consider it. Not too sure yet, but I'd strongly consider it. Buy it at 20. It might stay at 20 for a long time, might drop a bit, but eventually it's going to go back up. The highest it was at, let's look at the charts. So yeah, so you see most of the year it was above 20. It went all the way up to 28. 5 years, yeah, it's always been above 20. Like in 5 years, it's been above 20 probably for 4 years and a half. So it only dropped once in February 2016 to 1785. But besides that, it's always been above 20. So for the past 5 years it's been above 20. So I think it's a fair price. Buy it at 20, sell it at 23 maybe, 22. That's what I would do. I'm also watching Berkshire Hathaway, but the one that most people can afford. So this one, if it reaches 180, I'm definitely buying. I mean, even right now, it's a good buy because long term, the stock is going to go up. The 52-week range was 217. If you look at 6 months, yeah, and it was at 215 in January. In January, it was at 215, and right now it's at 194. And I think even before that, it was at 180. I was considering buying, but I didn't. So it would have made easily 20% in like 3 months or less. So it's dropping back down a bit again now. So in the 180s, personally, I would buy it in the 180s, but even right now, I think it's still a reasonable buy. But it's definitely a stock worth watching. So 52-week range is 164 to 217, but this stock for sure eventually, see, 1 year target is 233. This stock just keeps going up. If you look at Max, it's like an arrow, it just keeps going up. So it's a safe stock to buy. It doesn't pay any dividends though, so that actually, let's make sure. Sometimes Yahoo Finance doesn't give correct information. So BRK-B, what's wrong? Yeah, so it doesn't pay any dividends. So you're only going to be making money by buying and selling it. And let's look at the reports. Actually, let's look at the financials. This is going to be fun. So net income, 19 billion, 24 billion, 24 billion, 44 billion. So it doubled its profits from last year and with the same revenue almost. So they're doing something right. Look at the quarter, 4 billion, 32 billion, and a loss of 1 billion. But that's crazy though. 4 billion to 32 billion and then 1 billion loss. So it looks like they lost 7 billion under investment income. So maybe that's why it dropped a bit, but it's definitely still a great buy. And of course, Tesla at even this price, I personally bought it at 250. So I would say below 250 is a good buy. So yeah, thanks for watching my video. If you have any questions or comments, leave them in the comment section below. If you're interested in trading, I personally use Investors Edge or Questrade. If you can open an account with Questrade, please use my referral code that you will find at the bottom of the video in the description. So we can both get up to $250. So starts from 25 to 250, depending on how much you invest initially. If you like my videos, please like the video, share it with your friends, and subscribe to my channel. Thanks for watching.